Imagine waking up in the morning and seeing money deposited into your account without working extra hours. Imagine having the freedom to travel, pursue hobbies, or spend time with family, all while your wealth grows automatically. This isn't a dream. It's the power of passive income. And today I'm going to show you a blueprint to go from zero to financial growth in 2026. Even if you've never invested a dollar or built an online business, these strategies are beginner-friendly and actionable. Let's start by understanding exactly what passive income is. Passive income is money you earn without actively trading your time for it. Unlike a traditional job, where every hour you work equals a paycheck, passive income keeps flowing even when you're sleeping, traveling, or focusing on other projects. Examples include dividend stocks, rental income, royalties from books or courses, affiliate marketing, and even certain cryptocurrency strategies. The first step in your passive income journey is investments that generate recurring returns. One of the simplest ways to start is with dividend-paying stocks. For instance, if you invest $5,000 in a company that pays a 4% annual dividend, you're already earning $200 per year. And if you reinvest that dividend, your earnings compound over time. Diversified ETFs with dividends are even better for beginners because they spread your investment across hundreds of companies, reducing risk while still earning income. Real estate is another powerful method for passive income, and you don't need a massive budget to start. If buying a full property seems out of reach, consider real estate investment trusts, REITs, or real estate crowdfunding platforms. For example, investing $10,000 in a REIT that pays a 5% dividend gives you $500 annually, and that income can be reinvested for faster growth. Traditional rental properties are another option, where you can generate monthly rent, but they require management or hiring someone to manage them. Even small investments in real estate can grow steadily over time. Digital products and online businesses are another incredible source of passive income. Creating something once and selling it repeatedly is a game changer. For instance, writing an ebook, developing an online course, or creating templates can generate sales long after the initial effort. Imagine selling a $50 course to 100 students. That's $5,000. And with automation tools, email campaigns, and social media marketing, these products continue to sell without constant input. Even small projects can scale into significant income streams if approached strategically. Affiliate marketing is another method worth exploring. By recommending products or services online, you can earn commissions on every sale. For example, reviewing software tools, financial services, or educational platforms on YouTube, a blog or social media can generate recurring income. The key here is trust. Only promote products you genuinely believe in and that add value to your audience. Done correctly, affiliate marketing can become a major part of your passive income portfolio. Cryptocurrency also offers opportunities for passive income, but it comes with higher risk. Staking coins like Ethereum, Cardano, or Solana allows you to earn annual returns, typically between 3 to 7%, simply by holding and supporting the blockchain. Yield farming is another method where you lend or provide liquidity on decentralized platforms and earn interest or rewards. Always research the platforms, understand smart contract risks, and start with amounts you can afford to lose. Even small crypto investments can add to your diversified income streams. Side hustles can gradually transition into passive income. For example, freelancing or consulting now can generate extra cash that you reinvest into passive income assets. Starting a blog, YouTube channel, or social media presence might take time, but over months it can generate ad revenue, sponsorships, or affiliate income. The key is consistency and automation. Publish content, optimize it, and let it continue earning while you focus on other projects. Budgeting and reinvesting are essential. Every dollar of passive income should ideally go back into income-generating assets until your portfolio grows sufficiently. For instance, $200 per month from dividends, or a side business invested into ETFs, EITS, or digital products compounds significantly over time. Even small, consistent contributions add up to substantial wealth over years. Controlling lifestyle inflation is another critical factor. Many people increase spending as their income grows, thinking it's okay to splurge. But by keeping your expenses steady and investing the extra income instead, your wealth multiplies faster. For example, if your income increases by $500 a month, and you invest that instead of spending it, at a conservative 7% return, it could grow to over $50,000 in 10 years. Compound interest and disciplined reinvestment are your best friends. Insurance is often overlooked but crucial in protecting passive income streams. Health, life, and disability insurance ensure that unexpected events don't derail your financial plans. Imagine a major medical emergency wiping out years of savings. Having proper coverage keeps your wealth intact and your strategy on track. Another strategy for beginners is leveraging micro-investing apps and tools. Platforms like Acorns, Stash, or Robinhood allow you to start with very small amounts, even spare change, and invest automatically. Over time, these small contributions grow into a sizable portfolio, especially when combined with reinvested dividends. Starting small is better than waiting for the perfect time or a large amount of capital. Education and knowledge are as important as the money you invest. Staying informed about markets, passive income opportunities, and new technology gives you an edge. Read financial books, watch tutorials, and follow experts who provide actionable tips. But always make decisions based on your own research. Understanding the risks and rewards of each method ensures your portfolio grows sustainably. Mindset matters as much as money. Passive income requires patience, discipline, and long-term thinking. It's not a get-rich-quick scheme. You need to put in the work up front, automate processes, and stay consistent. Celebrate small wins along the way because each step compounds toward larger financial growth. Remember, you can start even with zero experience or minimal funds. Saving $50 a month, launching a small digital product, or investing in a beginner-friendly ETF can be the first step to building a robust passive income portfolio. The earlier you start, the faster your wealth compounds, and the sooner you achieve financial freedom. By combining dividends, real estate, digital products, side hustles, and crypto, you can create multiple streams of income that work together to grow your wealth steadily. Diversifying your passive income portfolio reduces risk and ensures that even if one stream underperforms, others continue generating returns. Finally, track your progress, adjust strategies as needed, and remain consistent. Financial growth through passive income is a journey, not a sprint. With the right systems in place, automation, and discipline, you can move from zero to a sustainable financial future, gaining freedom and flexibility along the way. If you want more strategies, examples, and step-by-step guidance to grow passive income in 2026, hit the subscribe button now. Comment below which method you'll start first: dividend stocks, real estate, digital products, or crypto. And let's build your passive income empire together this year.